jobs, trade, and what this second half has in store for you and your money is senior market strategist for the NYSE, Michael Reinking. Michael, welcome.
Hi, good morning, Kristen.
Lots to talk about this morning.
Yes, absolutely.
Let's kick off with the jobs. What's your takeaway?
Yeah, so look, I think at the end of the day, markets got a little bit nervous on the back of ADP. But if you look at the differential between the ADP survey and the BLS employment report, it's been about 80,000 jobs on a monthly basis on average over the last year and a half, right? That brought kind of the whispers that you could potentially see a jobs number below 100,000 today. The number that came in, better than expected, 147,000. You saw positive revisions, which is also kind of reversing a trend that we've seen recently where we've had these big negative revisions, also positive. But once you kind of dig a little bit deeper into the data, it's not quite as strong. So the private sector hiring was a little under 70,000, kind of the worst number we've seen in a little bit. And there was a big jump, surprisingly, in government hiring. Now the federal number fell 7,000. The bulk of the hiring happened at the state level. It was within education, so there may be some sort of seasonal adjustments there, but that accounted for about 70,000 jobs. So if you adjust the number down, right, you're looking at something in that 70, 80,000 range. Now you highlighted the unemployment rate fell. That fell because we're seeing the labor force decline, right? So we're seeing a decline in that labor force. If you think back to last year when the Federal Reserve began their interest rate cuts, we had seen the unemployment rate moving higher. A big reason that was occurring is that we were seeing an increase in immigration, right, and that was increasing the labor force, and you were seeing a higher unemployment rate. We're now seeing the reverse of that, where the foreign-born labor force is declining, given the border policy of the administration, and we're also starting to see the labor force fall. So you're having kind of the opposite effect on the unemployment rate.
What does this mean for borrowing costs going forward?
Yeah, so I think markets had started to kind of get in their mind that there was some slight possibility that you could get a cut in July if all of the stars aligned with the labor market data, trade, inflation data. With this report, that's pretty much off the table. So you're seeing yields moving higher, kind of reversing some of that optimism. Today, we're looking kind of up, kind of 5 to 10 basis points on the 2-year. We've seen kind of the longer dated yields move higher yesterday as we had kind of a little bit of concern in the UK that there could be a kind of a second Liz Truss moment. The idea that the big beautiful bill is coming, that could also theoretically, as that increases deficits, that could also put a little pressure on the long end of the curve.
Yeah, it's interesting because next week we also see that deadline on the steepest of tariffs set to expire, right? So
yes.
What comes of trade, I'm sure, will inform the Fed's decision at the end of the month as well. How does that factor in?
Yeah, absolutely. So in some ways, right, some of the message that Chair Powell has delivered is that he suggested that they would be cutting at this point had it not been for trade policy or the potential impact of tariffs. And with some of the numbers that were laid out during Liberation Day in the Rose Garden, right, that put some, the potential for inflation, because those numbers were very, very high. We've now since seen that ratchet down. Now, yesterday we got a trade deal with Vietnam, 20% tariffs on Vietnam, and then obviously the step up for kind of goods that were coming from China. It was sort of interesting that markets reacted positively to that, because that is a higher number than I think markets were kind of in general looking at. So if you look back to the UK deal, right, that was a 10% baseline. I think if we continue to see trade deals that come in at that level, I think the markets are going to not necessarily continue to respond well to that. I think the overarching view is that the average tariff rate would be in kind of the low to mid-teens. So we're going to have to see how things move forward. But from a Fed perspective, Chair Powell's almost said, you take away tariffs and I'll start cutting rates, right? And that's kind of where we're at right now.
Interesting. And of course, inflation, we know, is part of the Fed's dual mandate. We haven't seen a big tick up in inflation as some had expected, right, due to these tariffs. So I guess we'll wait and see on that front.
Right. And I think that's the kind of the important message, that we're kind of the idea that we've seen this pull forward of demand in Q4 and Q1 companies have built up inventories. They're still they're still working off of those
Through that.
inventories, the pre-tariff inventories,
Yeah.
right? So it's a little too early potentially to see the impact from that.
Yeah. Okay. Good to know. This mega bill, meanwhile, approaching the president's July 4th